Welcome to Facts Behind the Figures, the program that decodes the data and dissects the decisions shaping our economy. Beyond interest rate shifts to inflation targets, we go behind the headlines, spotlighting the rationale, the stakes, and the signals behind Central Bank of Nigeria's economic policy decisions. Not excluding your views, of course, as we navigate these economic and financial terrains. This is Facts
Behind the Figures.
Insight, analysis, clarity, facts behind the figures, where policy meets perspective.
In today's fast-changing economic environment, communication is not just important, it is essential. For central banking, policy decisions must not only be made, they must be understood. Welcome to Facts Behind the Figures. I am Sutechi Evo. In this edition, we examine the outcomes of the post-305th Monetary Policy Committee Communication Survey, exploring how Nigerians engaged with the message, what they understood, and what it means going forward. We will also review key policies and programs recently introduced by the bank, their implications for the economy, and the likely outcomes for everyday Nigerians. Following the 305th MPC meeting, the Central Bank of Nigeria engaged stakeholders not just to inform, but to listen, measure perception, and strengthen communication impact. To assess effectiveness, the bank deployed LinkedIn polls targeting professionals, academics, policymakers, and the general public. The results reveal strong visibility and participation. These figures highlight growing interest in monetary policy and reinforce digital platforms as key tools for public engagement. Effective communication depends on clarity, relevance, and engagement, with results showing strong performance. While the strategy is delivering value, there is still room to simplify complex policy concepts. Public trust also remains strong, with 75% expressing confidence in the bank's mandate. However, sustaining this trust requires continued transparency, especially in linking policy decisions to real economic outcomes. Beyond engagement, true success lies in understanding, and this remains a key challenge. This highlights the need for simpler, more relatable explanations of monetary policy and its real-life impact. Audience preferences are also evolving towards more accessible and concise formats. This reflects a growing reliance on simplified multimedia content over lengthy technical documents. Looking ahead, sentiments are cautiously optimistic. This signals confidence in policy direction while reinforcing the need to clearly communicate tangible outcomes over time. Beyond MPC decisions, the bank has introduced key reforms, including the Foreign Exchange (FX) Manual, Payment Systems Vision (PSV 2028), and the Nigerian Overnight Financing Rate (NOFR). These initiatives aim to enhance transparency, stability, and efficiency. The FX Code strengthens discipline in the foreign exchange market. PSV 2028 drives faster and more inclusive digital payments, while NOFR provides a reliable benchmark for interest rates. Combined with the recently concluded banking recapitalization, these measures will strengthen financial institutions, enhance market discipline, and boost investor confidence. For everyday Nigerians, these reforms are expected to deliver safer banks, improved payment systems, and a more stable economy. The key is preparation, managing debt carefully, saving consistently, and limiting exposure to foreign currency risks. Now, we take the conversation to the streets, bringing real voices behind the data. What are Nigerians saying?
The Central Bank of Nigeria is doing reasonably well in terms of pushing out its policies and programs. I think it will be better if they are broken down to the understanding of the people in terms of short videos, if possibly broken down into the three major languages: Hausa, Igbo, Yoruba, and then Pidgin, which is almost like a general language for all Nigerians, in infographics and other relatable mediums and channels.
It's important to stay informed, especially with how the economy is changing these days. Like when they say they are trying to control inflation or stabilize the currency, but the technical terms and detailed explanation can be confusing. I think it would really help if the information was broken down into simpler language, maybe with examples that show how it affects everyday expenses like foods, transports, or rent.
The interest rate now more closely tied to the benchmarks like the Nigeria overnight financing rate. Borrowing costs have risen, making people more cautious about taking loans. But on the positive side, these policies appear to be promoting greater transparency and stability in the financial system. Initiatives such as the Payment System Vision 2028 are also making a difference through the digital payments and making transactions faster, safer, and even more convenient.
The message is clear. People are paying attention, but they want communication that speaks directly to their everyday realities, along with regular updates on policy outcomes. Now, let's turn to our in-house financial analyst, Mr. Enita Loniro, for global and domestic financial updates and their implications on the nation's economy.
At its May 2026 meeting, the Monetary Policy Committee adopted a cautious approach by maintaining the monetary policy rate at 26.5% alongside all other policy parameters. This pause reflects the committee's intention to monitor evolving domestic and global economic conditions before taking further action. Although the global economy remained relatively resilient in the second quarter of 2026, despite persistent geopolitical tensions and disruptions to trade. However, the Middle East crisis, particularly the conflicts involving Iran and the closure of the Strait of Hormuz, significantly disrupted global energy markets and supply chains as well. These developments led to rising energy prices, increased transportation and logistics costs, as well as higher global price levels and cost of living. In Nigeria, these global shocks caused a transient shock to the disinflation trend. Inflation rose marginally for 2 consecutive months, reaching 15.69% in April 2026, up from 15.06% in February 2026. Despite this, the outlook suggests the pressure would be short-lived due to the economy's strengthened resilience, driven by improved exchange rate stability, increased external reserve buffers, stronger monetary policy transmission, ongoing fiscal consolidation efforts, a well-capitalized banking sector, and several other key reforms by the Central Bank of Nigeria. These factors indeed position the Nigerian economy to absorb external shocks more effectively. For example, the successful completion of the banking capitalization exercise in March 2026 resulted in the emergence of 33 stronger banks, improved financial soundness indicators for the banks, and greater capacity to support economic growth and withstand shocks. Also, the Central Bank launched the 4th edition of the FX Manual in May 2026, which is aimed at strengthening the Naira, improving transparency, and enhancing efficiency in the FX market. Equally, in the money market, the bank, in collaboration with the Financial Market Dealers Association, introduced the Nigerian overnight financing rate, a new benchmark rate for the money market, which is aimed at enhancing transparency and price discovery, boost investor confidence, strengthen monetary policy transmission, and also align Nigeria with global standards, which obtain in countries like the US, the United Kingdom, Japan, South Africa, amongst many others. Additionally, the Central Bank unveiled the Payment System Vision 2028, which is a strategic roadmap to transform Nigeria's payment ecosystem into a globally competitive, inclusive, and innovation-driven system. Its overall goal is to empower people, connect markets, and grow the Nigerian economy. So what does all this mean for the everyday Nigerian? All this central bank's policy direction is geared towards stability, predictability, and confidence in the economy. Key expectations that one may expect to benefit from these reforms include improved exchange rate stability, reducing uncertainty for businesses that rely on imports, greater investor confidence, leading to increased economic activity, as well as improved potential for job creation and income growth over time. While recent global shocks have caused temporary inflationary pressures, Nigeria's strengthened economic fundamentals and ongoing reforms provide a solid foundation for resilience and recovery. With sustained policy discipline, Nigeria's economy remains on a path toward price stability, sustainable economic growth, and improved welfare for all citizens.
While the survey demonstrates strong engagement and growing trust, it also presents a clear opportunity to enhance communication effectiveness. Insights from the Vox Pop further reinforce the value of direct public feedback. We are moving beyond awareness to deeper understanding. The facts behind the figures tell a compelling story. Engagement is growing. Trust remains strong, but understanding must deepen. Monetary policy is not just about numbers. It's about people, their expectations, their realities, and their confidence in the system. At the Central Bank of Nigeria, the commitment remains clear: to communicate with purpose, to engage with transparency, and to ensure that policies are not only heard, but understood. Let us keep the conversation going.